After seeing some market weakness in the last two trading sessions on the SPY, what is the GEX data now suggesting that the next move in the market will be? Well, if we just zoom into our chart here, we can see the largest gamma exposure concentration is still at the 610 strike on SPY, and this actually corresponds to the S&P strike of 6100. So both of these levels are major concentration zones. This is where market participants are focusing their position in the options market. You can see on the SPY, we approached that level twice and couldn't quite get there, both times rejecting back down to the 0 gamma level, which currently is just sitting below the 605 strike. So the key levels we're watching very closely heading into next week is going to be 610 on the upside, and here on the downside it's going to be between 603 and 604 on the SPY. You can see this has been a major zone of contention both on the upside as we approach this level right after Thanksgiving, and on the downside both times after rejecting just underneath this 610 strike. Personally, my bet is that the probabilities are tilted for a bounce higher back towards this 610 strike. However, we can't overly discount the probability that there will be a breakdown below this 0 gamma level. If so, we have several support levels here. First, of course, is going to be the big 600 level. This has been a major area over the last couple of months now. And of course, the big 585 zone. This was a big support level as we initially rejected off of the 600 strike in mid-November. So we've got two major levels here. If we do see a breakdown, it's going to be 600 as stop number 1, and it's going to be 585 as stop number 2. So those are our downside levels, with our upside targets being 610 on the upside and 615 thereafter if we can break out above that 610 level. Heading over to our chart of the VIX trading ultra low at 1381. This is just supporting our thesis that a move higher in the market is likely, with the volatility index trading near 52-week lows, consolidating in the zone, showing no signs of breaking out yet. This, along with positive gamma exposure in the overall market, is showing volatility compression, and this is really the kind of environment where you see prices oftentimes grind higher. This is what is considered a buy the dip environment. And so as long as the VIX stays below this 15 level, we believe there is a very low probability that the market has a big unwinding. Above 15 though, and we would want to reevaluate that stance. Another factor yet supporting market bullishness is the Qs. The Qs were laggards earlier in November and have really since exploded to the upside, now at all-time highs. They're trading above this 530 level, or got above the 530 level on Friday, had a little bit of a rejection. This is our upper dealer cluster zone up here. It is possible that we could see some dealer selling pressure early in the week. We'll have to take a look at the gamma exposure data come Monday morning to see if some of the GEX at these higher levels starts to really stand out. Most of this gamma exposure here at the 530 strike is probably going to be rolling off as traders come in Monday morning and reposition for the week of the 20th, which is this coming Friday. So we'll have to see what the GEX data looks like heading into Monday morning, and then we can reevaluate the probabilities for continuation higher, or if we're going to have at least some temporary pullback, maybe back down to the 525 level. Next, let's move on over to Bitcoin. Bitcoin trading above the 100,000 level. This has been approached many times over the last couple of weeks. It seems like this consolidation zone is now attempting to be broken out to the upside. If you recall from some of our previous videos earlier last week, we were highlighting the likelihood of this 110,000 strike as a next target. It does look like there's an attempt being made to move up into that next zone. Our dealer cluster level has moved higher. Now the 110,000 strike has become the largest gamma exposure concentration on the upside. So looks like all positive GEX data, and this is basically suggesting that market participants are bullish in both the options market and of course in Bitcoin itself. Next, let's take a look at Tesla. Tesla showing continued strength of 4.22% on Friday, despite softness in the market, now trading above the 435 level. And look at the gamma exposure data, all positive positive between the 400 and 500 strike. Believe it or not, this 500 strike is now the largest gamma exposure concentration. It's hard to imagine that even after all this bullishness, Tesla, running up 50-60% in just a matter of weeks, and still market participants are still considering more upside, potentially up to the 500 level. And if we look here at our volume data, this is volume from Friday. This looks like a very small bar relative to the rest of the volume data. However, this is 100,000 contracts coming in at the 500 strikes. So we're talking about a strike that is over 10% higher from where we're trading right now. 100,000 contracts being traded at that strike. That's significant in terms of gamma exposure, and this is why we're seeing continued interest. So that's going to be key to watch. I would expect some either consolidation or a pullback to the 400 strike prior to another leg higher. This is most likely speculation for an early year move, maybe into the January or February expiration. So that's going to be something to watch and potentially position for when a decent risk reward profile presents itself. Next, let's take a look at Google. This is a name we've traded multiple times in the last month. Had a little bit of softness on Thursday and Friday after basically tagging the 195 level. We're now trading just below 190, but in the grand scheme of things, after the big run up, this is a very modest pullback. I suspect this 190 level, perhaps even down to the 186, 187 level, this will offer some decent support in this area. We still have large gamma exposure concentrated at the 200 strike. If you recall from our previous videos over the last month, really, this has been a major level that we've been watching, that 200 strike. It still has a lot of interest at this level. Big volume coming in on Friday. Nearly 50,000 option contracts right between here, 50,000 option contracts traded at this strike price. So even though we had some softness in Google, market participants are still actively trading this 200 strike. So we think, somewhere in this zone probably offers a decent risk reward profile for a bounce higher, potentially into year end or potentially into the January 17th expiration, back up to that 200 strike. So we're watching that and trading it in our community Discord, which, by the way, I'll put a link down in the description below for you guys to check out whenever you get a chance. Next, let's take a look at Palantir. Palantir, big day again on Friday, up 4.64%, approaching that 80 strike yet again. We mentioned this after we tagged it here about a week ago. We tagged this 80 strike. We saw a pretty big rejection. This is classic gamma exposure behavior where dealer selling pressure comes in at or above the largest GEX strike. We saw an immediate retracement. This has now become our zero GEX level right around the 70 strike, and we've bounced off that level now above the 75 strike. So gamma effects are really kicking in here. Basically, this is like a miniature gamma squeeze as price basically comes back into this large gamma exposure concentration zone. And this is what we often see happen, especially after an initial tag, and we didn't trade for very long at this 80 strike up here. So an initial tag, an immediate retracement. In the case of Palantir, this was significant, over 10% retracement back into the 70 strike. Then we've got this big bounce, and so momentum is back in favor on Palantir. Gamma effects obviously are kicking in here, especially above this 75 strike. And I think there's a decent probability that we can see price trade at this 80 level this week. Next, let's just take a look at Amazon. Amazon, a little bit of weakness on Friday, like many other stocks, trading at 227.34 in the post market. But we do see large gamma exposure at the 230 strike, big volume coming in on Friday. But interesting to me is that gamma exposure is growing at the 235 strike and the 240 strike. So we've got some consolidation here right below this 230 level. This looks like an interesting area from a risk reward perspective to get back in for continued move higher, potentially up into this 235 strike by December 31st or maybe early into January. That looks to be a decent risk reward play. That's something we're going to be looking at again in our community Discord, potentially this week for an entry point. And this would actually be the second time we've played Amazon in just the past couple weeks. We caught a big part of this move here earlier back in the end of November. And so if you guys are interested in following along during the trading session, you can join our community Discord. It's free to join and check out. I'll put a link down in the description below. We've got a ton of great traders in there sharing their own personal market analysis and insights every single day. Top-notch community. You don't want to miss that. Also, remember, you can access our gamma exposure data and our option flow analytics tools by heading over to geeksoffinance.com. I'll put a link in the description below for that as well. Thanks so much, everybody, for watching, and we'll see you guys in the next video.